Hello and welcome to the third episode of Morgan and Seth podcast. We're here talking about real estate investing. My name is Morgan Heggie, and I'm in the interwebs with Seth Aruda. And today we're discussing real estate investing and how to protect your assets, build your wealth, and achieve financial freedom in 3 easy steps. How are you doing this morning, Seth?
Great. Monday's off to a good start. Had a couple of talks I was listening to on Clubhouse this morning about marketing and just growing our business. Was really excited to start talking to you this morning about some real estate topics. So yeah, been a great morning.
Yeah, absolutely. You know, last week I had somebody that had seen our podcast, our first 2 episodes, and he was asking me about buying his first property. And he was thinking about buying a condo, and we're just going to jump right in, I suppose. He was talking about buying a condo and trying to fix it up and maybe live in it for a while and or flip it. And he and I were talking about it. You know, he's a first-time buyer. He's going to be either using probably an FHA style loan. And I kind of suggested to him maybe he should consider either house hacking, where he buys a single-family residence to either already expecting to rent out some of the rooms, or looking at even buying a duplex or triplex. And you were even talking about a quadplex, 4 houses or more fills on, or 4 residences on the same property fit into the apartment building commercial kind of insurance protection. So a little bit different model there. What do you think, Seth, about those strategies? Would you recommend somebody buying a condo or looking at a duplex or even going more multifamily right out of the gate? What do you think?
Yeah, it's funny because this is like the second time this has come up. I was actually, one of my close friends reached out to me about this same thing a couple weeks ago, and I referred him over to one of our real estate partners that we work with. And he had the same question. He was like, hey, I'm thinking about buying a property. I'm renting right now. I just had a baby, but I'm trying to think of what the best strategy is for me and my family. And I told him, I was like, the best way to offset the cost of your mortgage or just your expenses, if you're going to buy a property right now, especially because interest rates are so low, is think about buying a property like either like a duplex or a triplex or even a quadplex, where you can rent out the other half or the other 2 or 3 units and generate some passive income, and also offset the cost of your mortgage and your expenses. And you also have a lot of tax write-offs when you buy a property like that too. And we can talk about those with, a CPA that we work with, and he can go more in depth into all of the different tax benefits that you can get off of a property where you have it as an investment, but you're also living there as well as your primary residence. So the topic seems to be on everybody's mind right now. How can I get into the business of investing in real estate, creating passive income so I can build wealth? And I think this is a great strategy to start with. I think having a property where you can generate passive income right out of the gate is a great way to position yourself from a real estate investment standpoint, just to position yourself in a way to build wealth and achieve financial freedom. So I'm glad we're talking about this so early in the process, because I think that, we can go into these type of conversations and explore a little bit of, what that looks like. And then also from an asset protection standpoint, how do you protect those assets the right way so you can avoid mistakes or exposures to your asset portfolio?
Yeah, that's exactly right. And it's really exciting to see, even in this turbulent situation, in this COVID environment that we still are finding ourselves in, and all the economic uncertainty, real estate is still performing very well and as an asset class. But also, everybody has to live somewhere, and people are looking at expanding their quality of life at home. Our whole team is now working remotely, working from home, so we have all this empty office space here, and everybody's looking for a little bit more elbow room at work or at home to work from home. So it's that blurring of that line. I mean, here we are, doing our same sort of meeting, but over over a long distance, and taking it to the public this way. So I think it is more of the future, and people are going to be working and living in the same space more and more as the future keeps going. This is where we need to get some experts on, where we talk to like some mortgage lenders and some real estate professionals, because there's been a lot of recent changes with zoning laws about how and where you can build secondary units on a property, auxiliary dwelling units, right? And get rental income on those type of spaces. And something that has a large backyard that maybe might just suit your needs and seems a little bit out of your budget, but you could put another living space back there and have a driveway to the back and start generating income out of that location, and then potentially move out in a few years and re-rent out the front of the house, the front house and the back house, and have 2 units there, getting your feet wet as an investor, and getting the advantage of that growth of that asset in terms of paying down the loan and growing the equity, and having that cash flow and having the tax benefits. I mean, that's huge. When you can depreciate that property over the next 8, 9, 10 years, and then do a 1031 exchange into another investment property, there's some serious advantages there that, with taxes going up all over the place, you have to be considerate of.
That's something interesting that I wanted to talk about. It is interesting when we talk about the duplex, triplex, style of property, because there are right now only a finite number of those type of properties, especially in our local market. If you look on the MLS, there's only going to be a specific number of those properties that are already built. But there are a lot of single family homes that do have, space where you can, build. So thinking about, or even converting possibly like a detached garage or a detached structure into livable space. So that's another opportunity, when we're talking about ways to create passive income and start investing in real estate. Having a property where you can create an ADU, an auxiliary dwelling unit on the property, and rent that out to like a full-time tenant, or even, as an Airbnb, like a short-term vacation rental. That's also another opportunity to get into real estate investing. If you already have a single family home and you look outside in your backyard and it looks like you got some livable space back there, that may be a perfect opportunity to talk to a lender and even a real estate agent about, building an auxiliary dwelling unit. So we can look at that as an investment strategy as well. I mean, the topic is becoming much more popular, especially just in the last 2 to 3 years. With permits becoming more affordable, and a lot of these municipalities allowing people to utilize their primary residence as an investment tool.
Right, exactly. So while you were talking about that, I went ahead and looked up here in North County and Vista on LoopNet. You can just put in multifamily and search your local area code or zip code, and it came up with these properties. So this is a 8 units. $2 million asking price for 8 units, 5.16 cap rate. That means, that's the cash flow rate on it as an investment. That's probably too big for your friend or my friend that we were talking to. Here's another 8 unit one for 2.3 million. But this is interesting. They have 5 unit apartment building, 3,800 square feet for $1 million. Again, that wouldn't qualify for the FHA loan because the number of units and the commercial nature of it. But this 3 unit, the 3 unit is technically still a residential property. So if it's less than 4 units, it's not necessarily going to be considered commercial. And they're only asking $600,000. You could qualify for this property with an FHA loan if you're a first-time buyer, as our example is. You can put as little as 5%, 3 to 5% down on something like this. That's nothing. If you had, $15,000 or so, you could probably do this property. 3 units, 5.5% cap rate, live in one, rent out the other 2, fix it up, and then, in a couple of years after you've paid down the $600,000 note and you've you've got two good renters in there that are paying consistently, and you've got cash flow. You get to count that cash flow as income, add that to whatever your W-2 income is, then refinance the property, take out the equity, don't sell it, right? But refinance and go buy another property to live in. So that's exactly what we're talking about. And that's right here in Vista. And here's a 10 million apartment building. We do insure these large apartment buildings. And we work with a lot of investors and a lot of investor groups that are buying multifamily either in an LLC or an S corp, and whole different conversation. But here we're talking about that young, scrappy bootstrapper trying to get into investment property real estate.
Yeah, no, that's interesting that you found just a few of those even larger commercial spaces. I was listening to one of our real estate partners over the weekend, and he has I think a triplex that he is listing in Vista. So that would, obviously qualify for an FHA loan. I think that they were only requiring like up to a minimum of like 3.5% down. Right. On a property like that. So, because rates are just so low and there's a lot of incentives that a lot of these mortgage companies are offering, it's a really good time and a great opportunity to start getting into real estate investing, especially because the barrier to entry right now is so low. I mean, once interest rates start creeping up and things start tightening up in the, with banking and with these lenders, it will, get a little bit more difficult to get into these type of properties. And I think right now is a great time to not only start investing in real estate, but start investing in real estate the right way. Setting yourself up to, start to create wealth and achieve financial freedom through real estate. You can do that right now very easily. And we work with a lot of real estate partners that not only are familiar with these local areas, but even specialize in this type of investing and for their clients.
Exactly. Yep. I'm just going to look for some more that maybe in the San Diego area here that would fit the group that we're looking at. So yeah, I did the math. 3.5% on 600,000 is a $21,000 down payment. That property would cash flow right away for you if you were going to live in one side of it as a young investor. So here's some other buildings: 7 units, 12 units, 6 units. These are bigger than we're looking at, but here's one 3-unit apartment building for $1.5 million. With what's interesting is if you're going to buy this and live in part of it, if there's 2 units that are rented, they will actually, in some cases, can count some of that into your income, not necessarily on an FHA loan, but some other kinds of lending. So it would be interesting to look at that and see what these units rent for. This is a really unique building down in, in Mission Beach, which is a beautiful area.
Yeah.
Doesn't cash flow as well because the purchase price is so high, right? But that you have to decide, especially in Southern California. So that's, a lot of folks are looking for the cash flow, right? They want to they're not necessarily looking at the appreciation of the asset. They're looking at, I want it to make me put money in my pocket every month. So San Diego is not the easiest market to do that in. You're going to be in some areas that are a lot rougher and a little difficult to find renters that want to pay a reasonable rate, and appreciation costs and all of those kinds of conflicts come up. But if you're willing to look at, something in Mission Beach and you're trying to have the asset value appreciate and you have cash flow, and you're looking for deductions, that's another half of the game. So
yeah,
and very, very good way to look at it.
Now, I know that also has something to do a lot with, whether or not these properties have been, updated or renovated. So if you are thinking about buying something that you may need to put a little bit of, sweat equity into, that can also affect things as well. And that's one of those questions where I'd love to ask, either, a mortgage lender or even a real estate agent or even your CPA to, see how that can benefit you if you are looking for some type of property like this. does it make more sense to buy something where I can fix it up and put some money into it? And then how can I offset those expenses from a tax liability standpoint, versus maybe buying something that like this, which is like turnkey. It looks like it's upgraded. I think we've got like quartz countertops, and it looks like it's been, remodeled on the inside. So that property looks like it may be already done. But that's an interesting conversation to have with, our real estate investor partners, our, mortgage lenders, and even our CPA.
Yeah. See, they're even mentioning that in this, like if there's 3 units there. If you were to rent out one, live in one, and have, a granny flat, so to speak, on the other, it's like inches from the beach.
Yeah.
So it's the 4th house in from the beach right there on that side, and it's like the 9th house. It's right there on that strand. So on a strand of beach. This one's interesting. This one's very interesting because look, this asset is perfect either as an investor or owner-occupied buyer seeking a turnkey property, irreplaceable location, with the ability to secure affordable 30-year fixed residential financing at historically low interest rates. Exactly. That because it's 3 units and it qualifies for residential financing.
I think I also saw you could do Airbnb on that type of property as well. So it's zoned to allow you to do short-term vacation rentals.
Right. Yep. It has some room for improvements. You could put solar on this roof. There's things you could definitely do to it. It looks like this is the parking. I wonder, and it looks, I don't know what obviously Mission Beach, San Diego is going to be difficult zoning issues, but you could potentially build a deck out on this side. So there's a lot you could do to it and still have parking right there at that angle, if that was approved. So, we're not real estate agents, but you mentioned the Airbnb aspect. It's really kind of handy if you're going to if you're living in part of it and you're renting out the other unit, you can sort of keep a close eye on what's happening with short-term vacation rentals. And this is perfect for short-term vacation rental because where it is, right down there by SeaWorld and right in the heart of everything. This is a great property. Yeah, it's expensive. It's $1.6 million. So, you're going to have to come with some capital, but it's everything you could possibly want in the area here in San Diego. It's completing the lifestyle that we always talk about. People are looking to live a certain lifestyle, and this absolutely achieves that.
Yeah, that looks like a great property.
Yeah,
definitely somewhere I'd live.
Me too. So, looking at, and that's like, I mean, literally that's 2 quick searches off the cuff. This is not prepared. We didn't go through this in advance. But there's plenty of these. There's plenty of these that are already multifamily. The other aspect we were talking about was, buying something and putting the granny flat in the backyard, the casita, the auxiliary dwelling unit. Those rules have changed a lot recently to where you can get into more condensed housing and create income opportunities if you're willing to rent out your backyard to somebody in an upgraded casita. So
yeah, there's I also know that a lot of the municipalities are loosening up on the permits for building auxiliary dwelling units, so that is becoming easier to do. I know there's even areas in our local market that are very, very affordable to get a permit to build an auxiliary dwelling unit. I know a couple real estate agents that are actually doing their build outs actually right now. So even talking about them as far as like a, nuts to soup kind of, process on that, I'd love to bring them in and just talk to them about their story about start to finish, what were the steps they needed to follow? How easy was it to get a loan or, come up with the capital in order to, complete the project, and, how easy or how difficult it was to, start investing in that type of a strategy. But again, like we talked about, it's a great way to, take a single family property. If you got livable space in the backyard, you can build an auxiliary dwelling unit or even just convert another structure that you already have into livable space.
Right. So this looks like a single family house that's been converted into a 3-unit apartment building with, upstairs and looks like 2 downstairs. It has 4 meters on it right there. You can see from looking out the exterior. Looks like the roof's in pretty good condition, although, there's got some curb appeal wants. Like this works, but there's, there's obviously some work to do to clean everything up, get it how you'd like if you're going to be living in one of those units. This is cheaper than the one we were looking at on Mission Beach, but but it's right in the heart. I mean, right City Heights, North Park, Hillcrest, right next to the park, Balboa Park, which was, designed after the park in New York, Central Park. It's beautiful, beautiful area, right in the heart of everything going on. Mission Beach, we were looking at over here, was out here on the water.
Yep.
Just different lifestyle choices, but it's what appeals to you,
Yeah.
And
we insure in a lot of these areas. So, there's a lot of properties like that in San Diego that fit that type of profile, the one that we just looked at. There's a lot, especially in those outer areas that you just mentioned surrounding San Diego. There's tons of properties like that where they've either been converted already to, multiple units, or they have the ability to be converted. I know there's a lot of duplexes, triplexes as well over there also.
Yeah. So here's another one, 3-unit apartment building. This one is interesting. Shake roof. Nobody's going to like that. Bars on the windows. Nobody's going to like, speaking at it from a risk management perspective, nobody's going to like that either.
We always got to go right into the risk management. Like that's the first thing that we see. This one actually, to me, is the best opportunity we've seen so far. Because, it's a 3-unit building. That means it's going to qualify. If you're going to live in one of these, it's under $1 million purchase price, right? The cap rate is reasonable. There's room for improvement on it for you to do some upgrades to improve it. If you were to live in one of these units, it's not a lifetime of living there. This is where, somebody who's in their 20s or 30s, that's just starting out, deciding that they are going to become a real estate investor, wants to make this happen. This is a great first time house hack, if you will, but type of property, because it's 3 units. It's in an economic opportunity zone, which means there's special financing available. Huge upside potential. This is absolutely true. Each one is a 2-bedroom, 1.5 bath. You can you're going to, this is not the Airbnb kind of sexy rental like we looked at on Mission Beach, but there's a lot that could be done here to improve this property. And it's still right there in town in Normal Heights, North Park. Yeah. Mm-hmm.
So
that one looks great.
This one, because I guarantee you the financing is that's available on this, because it being in an opportunity zone that they're trying to improve, it would be Apartment Advisors Inc. We should definitely, have those guys on to talk about this property. So, So, those are the kinds of things that the opportunities are absolutely out there. I mean, those are 3 clicks away. You just have to, if that's not where your head's at, if you're like, no, Morgan, I'm not 20 years old. I've got a wife. I've got kids. I've got money in the bank. I'm looking for cash flow. Well, we should be having, it's a different conversation. We should do an analysis on that. But I'm talking to, you were talking to quote unquote your friend. I was talking to another one of our friends, and we were discussing whether he should buy a condo or not. And I said, don't buy a condo. The CC&Rs, the HOAs, and all of the outside service rules. You're not going to be able to generate a rate of return on that. If you buy a condo, do they allow for tenants? And if they do allow for you to own it, but then rent it out to somebody else. And then if they do, there's like another person involved between you and that tenant's relationship. When the HOA says, well, they're not parking in the right spot, they're going to come to you to complain.
Right.
So I was advising him against that, but we just found 3 properties, 2 down in San Diego, 1 up here in North County. All of them 3 units. All of them would qualify for residential financing for that if you were going to live in one of the units. The other 2 units would then qualify as additional income to help you bridge that gap. We're looking at We saw one that is a down payment. If you did 3.5% down on a FHA style loan on a $600,000 property up here in Vista, that's only $21,000 down. Plus you have a place to live, So yeah, you're going to have that mortgage on 600,000, but the other two units are going to pay that. So if they're paying the mortgage and you're paying down the loan itself, if they're paying the financing and you're out making additional payments on that, you're going to have that thing free and clear in a couple of years if you get serious about it, a couple 3 years, and you have cash flow and you have equity built up. The other aspect I get excited about is then you need to protect that equity. That's where the insurance and risk management side comes in. That's what we specialize in. That, looking at this one, first thing comes to mind, it's the wood shake roof. No one's going to like that. Somebody flicks a cigarette up there or something and it gets stuck under one of those shingles or anything. Just anything is just not what you want. And I just looking at that, I could imagine that with that roofing taken off, re-stuccoed, put in nice windows and take the bars off and put in double glazed, strong windows so that people aren't, so that it's not a hazard and also not, so that it's a nice pride of ownership place to live, pride of renting too. There's a lot of opportunity just to fix that up and make it really nice. A young startup investor that wants to know about managing properties and investment real estate, we're going to learn a lot living there with two tenants living next to them. That's for sure.
Oh, absolutely.
So, yep.
While we're on the topic of that, why don't we talk a little bit about, insuring these type of assets? We talked a little bit about these different types. I think we covered 3 properties that are, in different categories and in different areas of the county, especially where we are in our local market. Right. And the whole reason why we want to have these conversations is to show people why real estate investing is such a stable and great investment strategy for their portfolio, how they can generate income, build wealth and then achieve financial freedom. But one of the most important things about that is protecting these assets and making sure you avoid exposure to risk and also avoid making mistakes when choosing the right financial protection. So why don't we dive into a little bit of that conversation and tell our viewers what are the best ways to protect these type of assets? And you touched on a little bit of it when we were having this conversation about the difference between commercial and residential. And obviously those are 2 different categories, even from an insurance or an asset protection standpoint. But just talking about the types of properties we just looked at, everything's under 4 units. And obviously those type of properties are going to be insured a little bit differently than let's say a commercial property would. So if we're just kind of laying a foundation, somebody's just getting started, maybe they just bought their first duplex or they just bought their first triplex or something that's under 4 units. Why don't we tell everybody what things they need to know about insuring these type of investments?
Yeah, great point. So we're specifically targeting the entry level, right? Because we're starting off early. We insure at all levels. I mean, we have people with hundreds and hundreds of doors, hundreds and hundreds of apartments. So, and that are constantly flipping them. But where do you start? And so this is the beginning. This is only our 3rd episode. So, where do you start? So, and the feedback we got from our friends and people that have watched the podcast already is like, where do I start? So people are most familiar with their residential property that they already live in. So if you're a renter, you realize, okay, all of my contents and everything, that's insured under my renter's insurance, all of my property, my personal property. The structure of the building is insured by the landlord. And if you're going, or the owner of the building. So if you're going to now buy a house, you would expect the cost from whatever your renter's insurance is to go up quite a bit, because now you realize that policy is not just covering your contents, it's also covering the structure itself, specifically from fire and storm and stuff like that. But the next thing you want to think about is if I'm renting out units and I'm the owner, suddenly it's not my stuff that's in there anymore. But it is my structure. So there's dwelling fire kind of policies that are a homeowner's policies that are excluding the stuff basically and protecting you as the landlord to cover the structure, and then also covering your liability for being the landlord. And so that's a different kind of policy than the homeowner's policy. And those have different policy form names. So there's the HO policy form. There's HO3 and HO5, which are just different shorthands within the industry to talk about, how rich the benefits are on the protection on that policy. And then different carriers have their own takes on that to have selling points to make them stand out from the ISO, which is the standard kind of policy form. So from there, once you cross over into 4 units and you have multiple, four units in the same structure, you're going to be looking at a commercial kind of policy form, which now they're not expecting you to live there. They're expecting you to have that as an investment, and that the tenants are basically, your clients, and they're paying you rents, and the exposure is a little bit different on a non-owner occupied multifamily 4+ unit kind of building. The financing is also different on that. So, you can't get a 30-year mortgage on a typical commercial loan, and you need more money down than when we were talking about on an FHA loan. But man, if you're motivated and you've decided that this is the kind of business you want to be in, and you want to build long-term wealth through investment real estate, the barrier to entry is very low. The bar is not high to jump over. So, if you can get an FHA loan with 3.5% down in an economic opportunity zone like this, and you're willing to do that for a couple, 3 years, 1, you're going to learn the business inside and out. 2, you're going to make money. 3, you're going to know what you're doing and know if that's what you want to continue to do. And I just see it as a huge opportunity for people. So I don't know. I'm sure I just glossed over some things. I know you probably have some other stuff on your mind about it, Seth. Oh, also vacation rentals. The short-term Airbnb kind of rental is more like a hotel motel kind of exposure than a long-term tenant kind of rental. So there's a lot of different aspects to think about when you're trying to protect something.
Yeah, there's a number of different ways that these properties are insured. We don't need to get into the exact specifics about all the different types of coverages, but I think it's just important for people to really understand just the basics of how to protect these assets. If you have a landlord, if you have a property like this and you are a landlord, you need a landlord protection policy in order to protect that type of an asset. If you're living there and you have a property where you're also renting out the other couple of units, you need to have a homeowner's policy for your unit, and you need to have a landlord protection policy for the other units that you're renting. Liability is really important on those type of properties as well, making sure you have adequate liability limits. I mean, I always tell all of our real estate partners that, you need to have at least a minimum of $500,000 in liability protection for your asset. And I would also recommend a personal umbrella policy. So that's really important, because not only do you want to protect your structure, in case it burns down, or in case there's, a pipe that bursts inside, you have protection under your policy for, the structure and all of the belongings inside. And even if you are, renting these units out, you have specific items in them like washer, dryer, stoves, refrigerators, microwaves, that's all covered under, your contents coverage. So you want to make sure you have coverage for your structures and also your contents. But liability is another big important coverage that people overlook. If you get sued due to a slip and fall outside on the parking lot or on the walkway, or even a personal injury matter like wrongful eviction, these are exposures that a lot of people don't really take into consideration until it's too late. And when they go to review their policies, they find out they don't have enough adequate coverage. So it's really, really important. If you have a property like this, if you have a landlord protection policy already, or you're thinking about buying a property like a duplex or a triplex, something where you may live on it and also be able to generate some passive income from it, please make sure you have the proper liability limits as well. It's very, very important. I would also even recommend looking at a personal umbrella policy, especially if you don't have any type of LLC or anything like that set up where you have these properties in some type of a commercial entity, because your personal assets are exposed in those type of situations. And we see this all the time. We insure investors, property managers, property owners, and one of the most important conversations that we have with them is, do you have enough protection for your assets? Let us show you ways that you can purchase or transfer this risk to the insurance company, so you're not self-insuring in case you have a major loss. And the other thing that you brought up, which was really good too, that I'll just touch on real quick, is the short-term vacation rentals. That is a totally different exposure when you have a property that has an Airbnb. And this is what I'm finding a lot of, is people already have these type of rental properties already set up, and they just say, you know what, I'm going to turn this into an Airbnb property. And they don't have a conversation with their insurance agent about it. And they come to find out that a lot of times there's a lot of coverages or exposure that is not covered under a standard landlord protection policy. A lot of times when you have an Airbnb, you need to make sure you have coverage for short-term vacation rentals. So talk to your insurance agent or give us a call. We have a number of different insurance companies we work with that specialize in Airbnb exposures and even just standard, landlord protection and investment properties.
Yeah, a couple of things you mentioned there that I want to also throw in there, and we should probably put together a checklist. Your tenants need renters insurance. None of their contents are covered, and if there is a fire in somebody else's unit and they have to move out, and to put them up somewhere else, and all of those kinds of exposures, they need renters insurance. The next thing and that's $100-$300 a year. They're super affordable policies, and they cover the
so inexpensive. Yeah. They're so inexpensive.
The other thing is the vesting. Like, if you're going to put the property, don't go out and form an LLC up front and decide that that's how you're going to do your first investment property. Keep in mind that, how you finance a loan, whether you're going to put it in the name of a trust or hold it in your own personal name or put it in an LLC, all of that also affects the type of insurance and the type of lender that you can work, the loan that you can get on the property. So take some time to think that through and know all the pros and cons of what you want to do in that area as well. I know there's so many things. The loss of rents, right? So on the commercial properties, do you have 12, 24, 36 months of actual loss sustained? When you're looking in these opportunity zones or these other older structures, and again, if there's a loss, and now suddenly the city comes in and says, well, we need to make it ADA compliant, and we have these ordinances and these laws and these other disability acts that you have to comply with on the renovation, and suddenly there's an increase in building cost. You insured the building for a certain amount because the sticks and bricks were worth that certain amount, and then suddenly you turn around and the city's saying, oh, well, you've got to upgrade this all to dual pane glass, and you've got to change the studs from 18 on center to 16 on center or something like that, or oh, we found asbestos and now you need to clean all this out. All of these kinds of things that or that they may come back and require of you, make sure that you have that additional protection in there. So there is a comprehensive amount of things that you need, that are quite large that you want to consider when you're going into this. So it looks great up front, yeah, but everything, even passive income, takes work, is what I would say. That it's just a classification of this income. It doesn't necessarily mean that you're not actively involved in the business.
No, yeah, and that's a great point. And we'll come up with a checklist of these items that we're talking about in this episode, just so our real estate investors and our other partners can utilize those resources when working with these type of clients, or even for, our viewers, if they're thinking about getting involved in these type of strategies or buying these type of properties. We'll put together a nice checklist so everybody has something they can look at just to kind of keep them on track with being properly financially protected, and just also making sure that their tenants also have the proper protection as well, so they can stay out of harm's way. And I also want to just segue into a conversation that we had with one of our CPA partners, and he was talking exactly about this, about setting up a trust and, putting those corporate veils of protection together and what that looks like, especially in California. So I think that episode is going to be coming out too. So we'll roll that out to everybody here soon. They can digest some of that information from one of our local CPA firms that we work really closely with, because he has some really great strategies that he recommends to just these type of clients, people that are, high net worth individuals or real estate investors or property owners, and what they can do to keep their asset portfolio protected, and the type of tax strategies that they can take advantage of when, buying these type of properties.
Yeah. The tax laws have changed a lot. So talking to your tax advisor is a big deal. Not the aspects of what we're talking about creating wealth and retaining it still apply. But here in California, there's been some big changes to property taxes laws.
We'll have some more in-depth conversations with those subject matter experts just to get their opinion and their perspective on, those type of, strategies and those new laws that are coming into play, especially with the new administration. I know that, there's going to be some changes as well to some of the tax plans, that are being proposed.
Yeah, he's going to increase the estate tax at the federal level, possibly, but yeah. Prop 19 has already passed. Mm-hmm. I think it goes into effect later this month, where, if somebody passes away, unless you are going to live in it as your primary residence, you're going to take a step up in the tax basis on that property. So, which is not good news for, children inheriting property, but, parties don't last forever, I guess. Taxes and debt always come around.
But that's why you work with professionals. That's why you work with a CPA. That's why you work with a real estate investor or a real estate agent. And you also work with an insurance agent, because these are the types of people that you have on your team in order to keep more money in your pocket. So yes, even though tax laws change, they are going to change all the time. Taxes go up. I've never seen taxes go down. But this is just another reason why you want to work with professionals, because their job is to educate you on the best ways to keep more money in your pocket. That's what we do.
Yeah, exactly. All right. On that note, I'm Morgan and he's Seth.
I am Seth.
And you're listening to the Morgan and Seth podcast. This was episode number 3 in the can. So thanks for listening. And we look forward to working with you as your trusted advisor for all of your real estate insurance protection needs. Thanks, and have a great day.